What's up, family? It is January 2, 2023, and we have finally got 2022 out of the way. Oh my God, I always make notations on my spreadsheet that I calculate every day following the SPX, tracking everything from the gap up, gap down, ranges, open closes. Wow, man, we got our fourth red weekly close in a row. Fridays have sucked. Fridays love going red, but four red weekly candles. We ended December down 6.06%. Year over year, minus 19.65%. Year to date, minus 19.64%. We closed minus 20.32% from the all time highs. Classified as bear market. I'm going to go over that with you in a minute because first I want to get this out of the way and go over to Twitter. This essentially was 2022, where 25-minute firework display went off, or however long it was, and just boom, everything just blew up. That was pretty much everybody's trading this year, even if you were catching the right sides of things. Now, we did well. We did very well. Caught the majority of those runs, the majority of the drops. But when we did get caught out, it was a time of getting caught out when it just so happened to be that we had a couple of new members in the house, and those new members just happened to go, you suck. Yeah, well, I haven't had a job in 22 years, and I haven't been in the States in 21 years. I've been living on the beach. You know, yeah, I'm happy with the way I suck, because I only wound up making around 800 grand last year. That was not a great year. It was a horrible year. And everybody else can attest the same thing. But we're looking forward to 2023. And I'll just bring you in here that 2023 is looking very yummy. Here we go here. We got 4 down weeks in a row. 1, 2, 3, 4. You had your 3 over here, and then you had your bounce over off of the September drop, off of that big August drop. We had 7 in a row. Extremely rare. Back when we had that drop off of March. We've had 3 over here from the bounce over there in May to the June low. You see what took place after that. Blah, 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 blah. These are just things that we track. And as you can see, looking over here on how this week was, and I'll bring you over here as well, this week actually closed down 3.84 points. Last week was only down 8.97 points. So down 4 points this week, down 9 points last week. And that is why you are set up here, how I track the multiple red weeks in a row and what takes place after that. We're set up, as you can see here, for a very nice move into the beginning of the year, into the CPI report that we have coming out, and into the FOMC meeting, which will not be until February. And for the first time ever, I'm going to throw myself under the bus, and I'm going to make you my 2023 stock market predictions. That's right. I am going to make predictions as to where I think that we are going to wind up going during the course of this year, but most importantly, and I will be very specific because you guys are family, I am looking for these numbers that I'm going to be talking about to be reached no later than Q3, the end of Q3, but I am expecting that these numbers are hit by no later than the end of Q2, that being June. So, again, I'm giving myself a little bit of space because, I'm throwing myself under the bus here. But here is what I am looking at for the start of where we are. I like how we have held this range over on the SPX. And as we start the beginning of the new year, I am going to be looking for a move back up above that 38.55 and a move to that 39.08, 39.45, and then we'll see what we're working with from there. Looking over the year, you can see, it's definitely where Everyone in the world can be out there talking about, oh, yeah, it's a bear market. I'm going to sell myself into a recession just like I'm going to tell myself I identify as a woman, not as a man, because I haven't done push ups in a couple of weeks and my chest is a little bit flabby. Thus, I'm a woman. Come the fuck on, man. We're looking here at a correction. I will repeat that word, correction. This was a correction, what we had this year. This was not a bear market. There's a specific of the bear market, and I'll show you that in a minute. But even though we did dip down 24.5% over in June, and then we did dip down 27.5% over here in October from the all time highs, I am saying that this is not a bear market, and this is the reason why I am saying it. This is your Dow Jones. And I specifically remember how the Dow Jones did not break into the bear market back in June. It held above that 20% from the all time highs. It had a rally much greater than what it had there in May, and it had a drop much greater than it had from back here in the end of March, end of April, into that June low when we came down here into October. And for me, that looked like a very good wave four. Wave four completed. We were down below 20%. And as you can see here, this closed, the Dow Jones closed above the 50 retracement from the lows of 2022 to the all time highs, right there at 32,800, within pennies of being 10%, down 10% from the all time highs. And as you can see, when we were up here over in December and November, this was pushing almost as strongly as the FTSE. Not as strong as the Nifty over in India, which was producing new all time highs throughout the course of the year. You look over at the other markets around the broadened European world, and other than the DAX, you were pushing all time highs. Now, the DAX, very much similar to the NASDAQ. This is the IWM. Apologize, didn't have my script written. The IWM was mainly a supportive character throughout the course of the last 6-7 months. Didn't really move much, didn't really do much, and everything just kind of shifted around as oil fell, financials fell, technology fell, and you held over here. But most importantly for me, this area over here in red, we filled the gap as the IWM was the strongest first mover after Joe Biden won and Pfizer came out with the cure back in 2020. It filled that gap virtually to the penny over there on October, filled it over here in June, came down, revisited in September, came back here for a triple bottom over here in October, and it's holding this trend line, which I can show you on another day because I don't have it because I'm using images. But again, over here on the IWM, the first move will be getting back above that 182. After getting above that 182, we'll see what kind of pressure we can put onto that 188 so that we can reach for that 195. This is going to take a little bit of time because you got a lot of shaking around that takes place over on the Russell 2000, but definitely looking for some upward movement on that. Now here, I'm looking at a very wide view of the NASDAQ to show you because you can see I wanted to really specifically look over here at this formation, how you have this ascending triangle right over here onto the September 2020 lows, 50 retracements all over the place, the 38.2 retracement down to the 2002 lows, holding over here on this support level, which is 260 over on your QQQ. A lot of gaps to be filled up there to the upside. Nothing major sitting down here below until you get down to COVID highs at 9,700. So for me, I'm not expecting to see downside. I like how you are getting very good support over here on this September low, the 38.2 retracement to the 2002 lows. And again, with 2022 out of the way, I'm looking for something to be pushing a lot further up into what I'll show you in a little bit with the QQQ. Here is the VIX for the course of the year. And you wouldn't believe it with those major drops that we had. we never had a VIX blow up. We've had this VIX just trolling here in this 20. When it gets down below that 2102, bulls need to watch out. When it got up above that 30, 33 level, the bears need to watch out. It stayed above the 30s a lot longer than it stayed below the 21s. So it was definitely a case where there were more sellers than there were buyers, no question whatsoever. But a big problem that I'm having with the VIX is because we now have SPX, SPY, and QQQ, all 0-day trade expirations. The VIX is a little bit out of whack. And the reliability that we used to be able to have on the VIX is not as applicable as it used to be. And thus, the last couple of weeks has been a little bit crazy since they've introduced those SPY QQQ Thursdays. So that's just where we are with that. But move on to the bigger charts here, and I'm going to start with Microsoft. For my 2023 prediction, I am looking for Microsoft to be above 267. And again, I'm sticking to my timeline no later than the end of Q3, but I am expecting it to be done by no later than the end of Q2. 267 is 11% on the upside. Come over here onto Apple. And Apple, I am expecting to see plus 157. That's right. I am looking for it to be back up above 157 from here where it closed as of the end of the year. That's a 20% move to the upside, and that is what I am looking for into Q2, Q3. Come over here to some of the big numbers now. NVIDIA. Whoa. What? You know what? I am looking for NVIDIA to be back up here over at 227. That's what I'm looking for with NVIDIA. Now, this might take a little bit longer than Q2, but I am looking for NVIDIA to be back up above 227. You can obviously see 194 as a resistance area, but I am looking for NVIDIA to be back up to 227 from here where it closed at the end of the year. That's a 55% move to the upside. Tesla. Now, this one's going to blow you away, but you know what? Let me go on to a clean. Yeah, you know what? Clean will work because clean is pretty decent. I'm looking for Tesla to be back up above 181. And 181 back up here would bring you a 47% return from where it closed at the end of the year there. Bring you over here onto Tesla, and obviously we're looking at a time frame which looks to everybody like holy shit. But here we'll go on to the 30-day. Here you are over here at December 1. These are your December highs. This was your fallout. Everybody going over on Twitter and having everything in the world that they want to say about Elon. And right up here, this 181 level, I am looking for Tesla to be up here. And you know what? I'm even going to fast track this. I'm looking for Tesla to be up there, but before the end of Q2. Come on to Google, and Google is actually pretty blasé and pretty nice, but same thing. With Google, I'm looking for Google back up above 100. From here where it closed at the end of the year, it's a 13% move to the upside. And then here is where it gets really interesting. This is ARK. Kathy Woods. And on ARK, I'm looking for plus 41. From where we closed at the end of the year here, that's a 32% move to the upside. And I'm looking for Kathy to see that 41 before the end of March. That's what I'm looking for on that. And that's a 32% move to the upside. I will show you here, zooming this out. This is what Kathy Woods looks like on a weekly chart, going all the way back to the 2016 lows. And I tell you, you know, this has basically crushed the dreams of every single person that had ever bought into this since what, 2017? No, your 1 year chart, there's not one person that bought that was up other than the people that bought the day after Christmas. But yeah, I am looking for this to be back up above 41. I would be willing to bet that you're going to see this printing 50s somewhere during Q2, Q3. You'll see ARK back in the 50s. So bringing us over here to SPY. Short-term view, looking for SPY to continue to keep holding as you had this 2-week consolidation period when we were up here in that 39.30, 30 or 40.50 area over on the SPX, holding that 39, 395 support zone, 395, 394. And now we spent 2 weeks down here resisting that 385 area and supporting this 377 area. What I'm looking for as we go into the beginning of the year, as we go into CPI, as we go into the FOMC meeting, is pressure back up on the 400s. It will obviously be some sort of catalyst that will be required in order to break above the 400s, but that was what I will be looking for as we head into the beginning of earnings season, which starts in 3 weeks. Now, I believe I can stay here and go just to the QQQ chart, and yes, I can. QQQ, what I am looking for immediately in the very short term is a move back to 286. That's what I'm looking for in the short term. Medium term, pressure up on that 294, 295 area. But from a very, very wide point of view, as we go in to Q2, Q3, I'm expecting that we're going to see pressure up here at 330, 331. And on the QQQ, that's a 24% return from where we are. Now, being that we are in the course of an election year, that we are in the course, or I'm sorry, in a midterm elections, that we are in also the third year of Joe Biden, that we have just come off 2 massively large sell-off years and closed down where we did, the sentiment is all shifted over to we are going lower, we are going lower. And unfortunately, that isn't something that I can sit over here and look at with a strong face. Now, the SPX spreads, they're paying and paying and paying on a regular basis, especially if you're over there on the no risk. But again, coming back to where we are and how we get these visits to that bear market line, 38.54.90 on the SPX. And when we come out of them, we have these much larger moves as we progress forward. I, again, cannot see the reason why there is such a large case for the bear move to the downside, where all you're doing here is breaking above 4,100 on the SPX. A break above 4,100 and 90% of the market not only gets stopped out of their shorts, but starts shifting over to be bullish. And when they start shifting over to be bullish is when you start being cautious about being a bull. But yeah, that's my predictions for the end of the year. 2023, I'm looking for Microsoft 11%, Apple 20%, NVDA 55%, Tesla 47%, Google 13%, ARK 32%, and QQQ, I would think we will be seeing 330s. It may take until Q3, but that's a 24% upside over there on the QQQ. Happy New Year. Let's make some fucking money this year.